civil engineering and construction group, Stefanutti Stocks, is a combination of Stefanutti Group, which listed in 2007, and the privately held Stocks Construction Group. Stefanutti Stocks is the lead construction contractor on the Kusile Power Station, and that falls within its key revenue-generating division called Structures. Paul, you mentioned Medupi earlier, so the Kusile is one of the key revenue generators for Stefanutti. It, as I said, operates within the Structures division. This is a division where operating profit margins are sitting at 7.1% from 7.8%.
Yeah, look, I mean, the Kusile thing is worth mentioning because it's a big project and it was quite a feather in their cap to be appointed the lead contractor there, and then they also, bring in and manage all of the others. I mean, an interesting company. The CEO, Willy Mayberg, is, I think, a good operator. They had some guys that they incorporated some of their sort of second-tier management, apparently amongst the best in the industry. General and big footprint up in the Dubai, Middle East area, which was where the Stocks business was. And Stocks had been privately owned for a while. I think there were some private equity players in there. So it's about a 2 billion rand market cap company, not expensive at current levels. It's moved up from about 10 rand a share to about 12. So it isn't yet, enjoying the kind of enthusiasm, but it suffers from all the same sectoral malaise that I was referring to earlier, anxieties about where we are in the cycle, quite a lot of general construction work, and therefore dependence on government and related parties.
Janine, what are your views on the diversification within Stefanutti? Because if you just look at some of their projects, they really span a huge range of sectors, from water being one of their key ones, but of course mining, transportation. They've got a well-diversified book when you look at their sector-specific focus.
Well diversified in terms of sector and geographies. I mean, they're big in Africa as well, the Stefanutti, the Structures division. What I think is probably holding them back at the moment is that acquisition of SciCAD that they made last year that's come through, where a lot of the water infrastructure has not happened. And paying, well, to start off with, I think it's 306, and they actually got the price down about 50 million now as well, because the key contract, the Western Aqueduct, didn't come through for them. If you look at acquisitions, it's very much acquisitive drive in terms of getting those sectors going, which could be a bit expensive looking at the goodwill in the books and projects not coming
Have
through.
they been taking big provisions so far, as you say, goodwill perhaps on the one side, and then of course for loss-making projects or their order book?
In terms of loss-making projects, they had two smaller mining projects that affected revenue, that affected the operating profit, but not real big-time projects that didn't do well.
Yeah.
But in terms of going forward, I think they were maybe a bit too late and paid a bit too much for SciCAD, thinking that it's going to be a big spend.
But they reduced, that price came down by 30 million already.
Yes, but it's still, if you look at what Basil Reed did last year, they bought a company called Valenti Brothers for 26 million, and they just got awarded 1.5 billion rand water contract. So in terms of water, there's been a huge consolidation drive. Esau Frankie bought Shearwater Pipelines as well for 270 odd million. Huge goodwill attached to that price as well. And SciCAD and Esau were doing a joint venture for Western Aqueduct. So you don't really have to buy big to really make it work. You just need to know how to consolidate your business. Yes.
Yeah. So Paul, what are your views on that? And then you alluded to the Middle East and the fact that they're still in this environment there, which has also been battling a lot.
Look, what Janine is saying is very illustrative of the point that concerns me, is that when you're in the construction game, it's better to be lucky than smart. In other words, timing is everything, because assets that are not trading with substantial value suddenly are hugely valuable a few years later. I remember sitting in the Esau Frankie waiting room to see the CEO once, and it was booming. The company was doing spectacularly well. It had listed and there was just no sense of any kind of problem. And I looked on the coffee table was a company booklet from 2 or 3 years before, and in it they were writing letters of condolences to all the people that had been retrenched. And I thought, that's weird. But then I was struck by how it happens in this industry. So even Basil Reed, we were talking about earlier, was at a 40 Rand a share price and then fell to 10. So I worry that this is an industry that is prone to chronic cycles of profitability variation, and you never know where you are in the cycle.
And it's about timing and getting lucky. Of course, also when you're investing in the stocks, you've got Stefanutti calling for perhaps a recovery next year. That's what Basil Reed is saying as well. What are your thoughts on putting your money into into Stefanutti stock at this point?
Into Stefanutti, I think Stefanutti is a good growth stock. But in terms of operations, what's happening, mining services not having picked up, fairly new division, roads very small as well,
and
not really happening.
Scaling back on that.
Exactly.
End.
So everything has to come. Most of the revenue has got to come from concrete structures, and I think, in terms of margin, at a 7% margin, they can only carry the business that far. And given that they made these acquisitions at very high prices, and there's a lot of goodwill on the books at the moment, working capital across the board for all construction companies, they're really struggling. So I think it's cheap, but it's really not very liquid either. So you're not really going to get huge growth, I think, in the next year.
So
looking at this.
So what? Where does it stack up? Hot or not?
I'm a bit lukewarm on that at the moment.
Lukewarm, from hot to lukewarm. Liquidity, as Janine mentioned, is an issue. If you could get your hands on a Stefanutti stock right now, would you?
Yeah, I quite like the management team, so that's a plus. And I've been giving a negative perspective here across the board, and I'll stick with not hot for this one. But I am very positive about Africa and about construction and about physical infrastructure needing to be built. The question really is, how do you make money from that?